The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everyone. Basil Chapman here, sitting in for Tommy O'Brien. Yes, morning market kickoff hour, 9:06, and we're looking at the Dow. This is going to be very interesting because the futures have been trying to rally. They've been up over 100 points for much of the morning, and the YM right now is trading at up 131 and 42,825. You've got this arch formation. The futures did make a lower low yesterday, and that's going to be very interesting. And I'm anticipating some kind of an arch formation that continues, and it makes a second arch formation. And I'm going to draw this in. The height is going to be determined by the action going into Monday afternoon, Tuesday morning. That's the way I'm looking at it right now. If you're looking at the ESs, the continuous contract of the E-mini, up 18 at 5935. Not a great day yesterday. The speed with which we turned around from the upside to the downside, then up again, then down again, then up. Oh, that was quite something. Now, I want to talk about this as we go into the different indexes. I'm just going to do the futures for the moment because that's really important right now. The NQ, a nice candle so far this morning, up 83 at 21,249. But it too, all of them have got this arch formation. And I may as well just do this. For those of you who are not used to my work, I look at three core patterns. Let me just find it right here. Three core patterns. There it is. Straight up, straight down, cup formation, arch formation. And these three are the patterns that you can see all the time in the market. Even when it's a sideways move, if you drill down into the shorter time frame, you're going to see that it's made up of these three patterns. The one that is in red here is where you mix 1 and 3, straight line down and then an arch formation, straight line down, then an arch formation. If you take out that left side low, within 2 bars, you've got to close above that, not you. The symbol that you're following must close above the left side low and attempt to try to get to the arch high. Usually that's a peak A or a B minor or a B that's starting to fail. On the left side, you can see so on the right side, it's a green. It's the reverse Y pattern. And you can see here, look, there's the Y. You go straight up, you make a cup formation, and you break out. You go straight up, you make a cup or a V-shaped formation, and you break out. And that's a bullish. This is bearish, and that's bullish. So where are we right now? I think there's a whole mix. It depends on your time frame. Let me go to the IWM, the Russell 2000, RTY. Here it goes. The RTY trading right now, if I can get the right key. There it is. All right, there. RTY is the Russell 2000, and it's been, like the Dow, it's been kind of a laggard. The others have held very well, but look at this. RTY sitting on this 200-period exponential moving average has now become a magnet because it's hit it so many times. To push away, you've got to get, instead of up $5.80 at 2255.10, you want to see this up in the 232 area, 22 area, and it's not even close. And this weekly chart, I have to wait for the end of the day, is probably going to give a sell signal. In fact, I can do that right now because this is the third bar underneath the 14-period moving average. So it's in a sell signal, not a sell mode yet, but a sell signal in the weekly chart of the IWM. So only one that's even given a signal for the weekly charts. Even the Dow, which is lagging the others, INDU, look at this, INDU, is not, at this particular point, days young. It depends on where we close. But that will be very close to a sell signal in the weekly chart, but it hasn't got there yet. It is a sell mode in the daily, so a lot of work has to be done. Now, let's do this. I'm going to go to, should I do that now? I'll do more of it in my show. I'm just helping Tommy out right now. Just had some difficulty being here at this particular moment. So I'm going to do this. Let me go on, and I'll show you the goals. The gold that was a very nice move yesterday. Today it's stalling a little bit down 7 at 28.62. And that weekly chart, as I've said, this is a work in progress. It is forming this H pattern, but it hasn't broken down yet. If at any point it starts to trade under 2,600, that's going to be a problem. And if it trades over 20, I'd say 2687, today it hit 2681. If it's able to get there to the 2690s, that's going to be much more positive. That'll be saying, hey, gold can actually move now. But hey, let's just do this because silver is the same kind of, look at this, a little bit of a rally today, up 40 cents at 30.30. It's actually now doing a little bit better. It's funny how they've rotated. The weekly chart doesn't look doesn't really look very good. The arch formation, okay, let me just do this because it's Technical Friday for me. I usually do this in my show, but I'll do this right now. You see this arch formation did not take out the left side low in silver, the continuous contract daily chart, and yet it's running quite nicely today. So here's the lowercase h. They can go to a lowercase m. However, I never rule out this possibility that if there's a strong move and there are 2 out of 3 closes, it doesn't matter the time frame, 2 bars that close above the arch high, especially if it's at a peak A or a B, that is usually very positive. And all of a sudden, you can look at this chart and say, wow, it's gone from negative to a potential cup formation. So these are all potentials. I'm just drawing the patterns because the patterns determine the viability of the price move. So at this point, you're vying between getting a cup formation and a breakout with 2 closes out of 3 on a daily basis above 30.389 in silver. And all this 200-period moving average becomes a very strong barrier, and it just can't break above it. It comes back down. The 9-period moving average is still very negative. But look, the MACD is trying its best to cross positive. All right, let's go to the, just for the moment, we'll go to the GDX. Nice candle yesterday, pulling back a tad at minus 8 cents at 35.23. We'll see if this can continue, and let's go to the SLV. Although the SLV relates directly to silver, the GDX is the gold miners. The GLD will be the one, GLD. Yeah, so look, the silver chart looks very much like the silver itself, iShares Silver Trust. This is different. This is the GLD. That looks a little different. You can see it's like it's looking up. Like it keeps gapping up with these big green candles, and then it pulls back. So for gold, the GLD itself, which trades at 1/10 the price of spot gold, is trading at 245.42, right? 244.34 right now, down 1.08. It needs to get to the 247s, and it needs to do that pretty quickly. Let's go to Bitcoin. Bitcoin right now is trading down 580 at 97,610. Basil Chapman sitting in for Tommy O'Brien. This is Morning Market Kickoff Hour, and I'll do my show, the Tiger Technicians Hour, straight after this show. Meantime, Dow hasn't yet opened officially. It's unofficial. The pre-market has the Dow futures up 160.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Let me just do some questions as they come in. We've got a few minutes to go before the opening bell. Question came in, have I reviewed the S&P? I've done some of it. I'll do more because it's an ongoing thing. I must mention that the sell-off that we've seen has been extremely orderly. It has really not been the kind of sell-off that I get, or I've always observed, when there's been a full-blown actually, I shouldn't use that word. It should come after the next word, and that should be when there's been a blow-off top, and you get this just a total failure. I mean, the market just sinks. I haven't seen that. It's been extremely orderly, and it's been extremely rotational. I had mentioned to subscribers the other day that, in fact, I even had it down, and then I took it off, that on a purely technical and political basis, I see something like a Tesla has been extremely overbought and that I want you to buy. I actually had it all typed up to go TSLS on the short side. I think it was at 7, it was right here. So it was about four sessions ago. So it was right there. It was that little tiny candle, 752. I knew there was a 5, 752, 781. And I was going to say buy it under a 770. And here it is at 847 right now. That's the short, Tesla short. And even here, look, Tesla, how orderly it was. The dreaded H. Remember the H pattern I was just showing you? There's the H, and now it's gone 1-to-1 to the downside. And that just says to me, it was overbought. Look at this. All of my technical indicators here are very overbought. And now it's getting to a more reasonable level. There should still be some more selling. But at the same time, that's what I'm looking at. And when you look at something like even an Amazon, which I said has got that round number all-time high, now I'm only now getting the arch formation, and out of the last 3 sessions, two of them have been below but closed above the left side low. That's most important now, which is 218.73, the low of the 20th of December. So this to me, I'm still saying that my daily charts were all negative. They were all showing negativity and that there could be a pullback. And it's those weekly charts that are going to tell me whether or not January, which I anticipated was going to be choppy with limited upside and starting to expand a little bit to the downside, if that's wrong. But bear, short term, absolutely, I can see bearishness, but not the weekly charts. I mean, maybe this is a slow process. It's going to take months, and we just go to lower highs and lower lows and lower highs. All right. So with that said, I had a question about CFLT. What exactly was the question? Hi, Basil. Happy New Year. Happy New Year to you. Ride the wave, Matt. Can you show CFLT? So CFLT, there we go, Confluent. This is Confluent Inc., data streaming platform for tech industry. Let's see. I think didn't Datadog also do the same thing? D-Dog, yep, they made a peak E top of the 170. Was that a round number? I don't think so. 170.08, but 165 open on the very day it made its most recent high at peak E, and now it's trading at 143. Oh, those round numbers are potent. But let's go back to CFLT. Okay, so the way I'm looking at it, so it's got the same peak F, it's got the same top, doji candles, comes down, dreaded H pattern, went to above the 200-period moving average to a peak D in the weekly chart. Remember the technical analysis for me, a buy signal should be upgraded to a buy mode, taking you to at least 4 higher peaks. That's peak A first, B second, C third, peak D is the fourth. That's where other things can happen. It can recycle higher, but your objective is to get to the D, and then you could pull back. What do you have? But look, the weekly chart is still holding very well. So the question here is, what do I see? Always look at the longer term. This is the tide. The bigger tide is that the monthly chart is in a trading range between 40 and about, I'd say 15, but really it's really 20. Under 20 is a problem. So it's between 20 and very short term 36. So it's just stuck. And the weekly chart just stuck. So on a longer term, if it takes out 20, 25, 29 is the 200-period moving average. If it closes under that on a weekly basis, that's negative. Right now, it's just digesting big gains, but it has had a terrible slide from the 94.97 all-time high of November of 2021. So this is telling me that it is, if I had to look at this and say, what is the company doing? I say the company right now is kind of struggling. It's holding its own, but it's kind of struggling. It's not breaking out. It's not making money the way it was anticipated back in July of 2021 when it ran from the 40 area up into that high in the 94 area, double. Now it's just kind of stuck. But you've got to be careful, because if it's in a business area that is starting to see a lot of competition, and this is also part security, it should be doing a lot better, and it's not. So I'd be watching on a very short-term basis. A close below, I'm going to make it tight right now, a close below 27, and it's at 28.25 right now. It says, be careful. Very likely it's going to test the 26 200-period moving average at 26.25. It has to, and I'm not sure it can do that from the chart I'm looking at. It has to very quickly go above the arch, get into the 30.55 area. Hope that helps you. Next question was, I will do the S&P in a moment. VICR, and a Happy New Year to you. VICR, Matt. VICR. Made a peak E in the weekly chart, pulling back from below the 200-period moving average. Vicor, I should have typed in what it did. Every time you ask me about it, I say I should type it in, and I forget. But in the meantime, it's got this arch over in the, it went to a peak G/B, which really turned out to be a G, and then it came down. Yeah, so it's trading at 48.22. VICR is the symbol. I'm going to do this real quickly before the market opens. So there's your dreaded H, but it actually went to a peak D. So that said, it should have held the left side low. If after a peak D, it takes it out, that's very negative action on the shorter term. And that's exactly what you saw. B, C, D. Turns around, does the cup formation, beautiful time sequence, and almost a time lapse, some beautiful symmetry in the arch formation. That's what we always look for. Took it out, hasn't done the one-to-one to the downside. Okay, trading at 48.22. I'm just going to recommend, I don't know if you're long, but I'm going to recommend if you are, I don't know the situation, and I'm not going to guess. What I'm going to say, the real question for me is always, I look at it and I say, would I buy, would I sell, would I hold? And right now, to me, it looks like I would be lightening up. I would take some profits if I haven't already. If I'm in a loss, I would absolutely take a little bit off to ameliorate any further decline, because I don't see anything yet until it holds the 47 to 46 area. And
the consistency you're looking for is closer than you think. One or two adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the second and fourth Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi folks, we just market open. Dow's up 192, S&P's up 29. Very interesting opening here. So the question for me was, and I had it all written down, I said, never change something that you've thought about and you've put in. I was going to go back into our aggressive position yesterday. We got stopped out of a small loss, but a loss nevertheless. And I wanted to go back in. And I think we would have got it because I had it under a certain level. But I said, if there is a very strong move up today, I need it on a closing basis. I cannot have it intraday. And if it's so, it means that next week there's a chance that we could have further rally, because I am anticipating this is the opportunity for the markets, and I'll do it right now. But just let me quickly say, so we had sometimes right here. Okay, I did that. Zip says, Basil, last week or last year, your choice. We looked at XPO. Where do we go from here? Also, Basil, thank you so much for sitting. Okay, that's always my pleasure. If I'm able to do it, that's fine. So look, XPO is the transportation. It's transport freight logistics. It's made a leg F in the weekly chart. This could be an alternate count, but for now, there's no need to change that. But it is a peak D with a very sharp pullback in the weekly chart. Very ugly candle for the week of 3 weeks ago. But wait a minute. Look at this. 161 all-time high, round number, 161.00 at the exact high with a doji type candle. And look what it's done. It's gone all the way down to 100, just under 130. It's trading at 133. This is telling me that in the IYT, that is the transportation index, this is called the iShares, Transportation Average ETF, which went to almost the same thing, went to a peak E. This did go to a peak E. The other's in leg E. And now it's got a peak E in the weekly chart. That's the fifth highest peak at 75.59, all-time high on the 25th of November. What a pullback. And look, the bounce is barely there. Today it's up 20 cents so far. It's really struggling. And that's just telling me that regardless of what economists say, regardless of what the Fed says, regardless of what any presidential candidate has been saying, regardless of what Trump thinks, regardless of what anyone is saying, there is a pullback in key areas of the economy, and that's the transportation index since November. So that's all of December, right? January's just started. But if you put it together with, now let me go through this very carefully. Look, if you put it together as a component, question is XPO component of the new Dow theory. I'd like to think of it that way, but as long as you bracket it and say it is just a component, because it is it's a technical part of it, right? But wait a minute, if you look at CTAS, look, same thing. A few weeks ago makes an all-time high. Cintas Corporation goes to 228.12 back in end of November, beginning of December. Here it is after two gaps, huge gaps, is down at the 183 level. Look at the weekly chart. Look at URI, which is the URI, which is the United Rentals Inc. To me, we're already in some form, I can't call it a recession, but a rotational slowdown. There's just no question about it as far as I can tell. Okay, and if you look at Caterpillar, look at Caterpillar happens to be up 2.28 today, 362. But what a pullback. I mean, really, it goes from the 418.58 high of November, and it's trading right now at 362. So something's going on. Deere, this is agriculture as well. Deere goes from a high of 446.70 with a couple of round number opens around in that area. And here it is at 419. So there is a slowdown. If you look at the TLT, I didn't finish that. So the TLT is the bonds trading, a whopping 15 cents higher at 87.74. I mean, this looks terrible because the TBT, which is the basically the yield, this is the inversion of the ultra short Lehman 20-year Treasury bond ETF, gone to a peak C1, maybe a peak C2, but it is on its way higher. It has stalled a little bit. But this is something to be looking at. And look, Toll Brothers, same kind of chart, 169.52 back at the end of November, trading peak E weekly. I have to put a down arrow here, even though it's not Friday at 4 o'clock. But this has gone for so many bars way below the 9-period moving average, negative. That's in a sell mode. And the Toll Brothers Home Builders, Yeah, maybe now it's starting to form some kind of a base, but it has had a very sharp pullback. HGX, correct. I knew it was LO in the den. HGX, there we go. HGX, the Philadelphia Housing Sector Index, 5 weeks ago, 1, 2, 3, 4, 5, 6 weeks ago, makes an all-time high, and that was just under 840, at a peak D in the daily, peak D in the weekly, and a leg F goes to a peak F in the, that could be an alternate count, but this is serious stuff. So I'm taking that part of it pretty seriously. What I am saying is the IWM, the Russell 2000, it has pulled back sharply, and I'm watching this because this is going to be a clue between that and some of the cyclical stocks like steels, maybe aluminum, whatever it is in the whole area. That's something to monitor. So we need to see by the end of January, by February, what's today, the 3rd, January the 3rd, yeah, February the 3rd, I want to see at least at some point during this entire 4 weeks, some kind of move to 228 in the IWM and holding on a weekly basis. That's really necessary. All right, I think I did a bunch of those things. Question came in. BTC with GAN. Oh, okay, I'm going to just do the BTC. Look, the BTC, I said, has made some kind of a top at 110,180 on the 17th of December. Now digesting the gains in the daily. The weekly still looks good, although it's a peak E and a leg D in the monthly chart, Bitcoin. And we've been long, and we've taken some profits, haven't added back yet. All right, now let me do this. Question over there, question over there, question over there. Yeah, FXI. Now, I'm GT. I haven't heard from you for a little while. I'm a little concerned. I hope you're okay. GT, this is iShares China Large Cap ETF. Just stuck. Just stuck. I said that 200-period moving average in the weekly chart. What a magnificent tool this is. Look at that. Stuck. Would you have said when it broke out the week of the 27th of September, skyrocketing up into the 32s and then pushing even higher into the 3750 high of the 11th week of the 11th of October, that the 200-period moving average was important? Wow, look at this. Out of the, after, let's call it 12 weeks, right? Look how many times that 200-period moving average has been hit. Isn't that amazing? So it's got to break away from, it's got to get to 3160 in the next 2 weeks, or it's going to test the 29s. That's going to be a tough thing to do. All right, so I've done a whole bunch of things there. All right, so now that's a break coming up. Yeah, so in this break, I'm going to do just one quick thing with the I'm going to do this on, SBLV. Look at that pullback. Peak F, this is the low volatility.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, Basil Chapman sitting for Tommy O'Brien. This is Morning Market Kickoff. So kicking off now, I wish I could do what Tommy does. He does just such a brilliant analysis of the yields, of where we are, what we're doing, what the outlook is, etc. But I'll tell you what I'm going to do right now. I'm going to look at the TLT, and I'm going to talk about patterns. You see this arch pattern that went to a second arch and pulling back? This is the monthly chart of the iShares 20-year Treasury Bond ETF. You see this pattern right here with this a pyramid shape, and you come all the way back down. There's a chap we've inverted falling axe formation. This is a technical Friday. I don't have to go into it though. But it broke down and it went to a peak D. Usually when a peak D, you come back down and then you break the arch formation plus this. I'll have to show the chart just real quickly. So this particular pattern right here, it's normally this Chapman falling axe formation. You rally up and then you make lower highs and much lower lows, and then you find some support and it breaks the downtrend line. Well, that can also be the inverted. I've just turned the slide upside down. Comes down and breaks to the upside, makes much higher highs, higher lows, and then it finds a bit of support, resistance, and it comes down. So the dreaded H usually doesn't even get to this level. It just goes up to an A or a B and then arches over. This one goes all the way to a D. Then it pulls back. Invariably, it finds some support at or above the left side low. But if it takes it out, and we saw that in whatever stock it was we were looking at before, and I said that's unusual, and it went all the way below that, this is where it finds some support. So that's really important, because in this particular pattern, you've got your inverted falling axe formation, right, which is also the H pattern. It was getting messy, but I need to put it in there and there. Most software packages don't have these arches, these ellipses as just an arch. You could make it a full arch. I only use a quarter. A quarter is called the quarro, and what happens is it finds support. Well, this is trying to find support, but the technicals, look at this weekly chart, 8% in the stochastic. That's like 92%, which is usually very bullish if it's on the upside. This is very bearish. MACD the histogram hasn't even started to decline, to see the narrowing of the histogram. So I'm just saying, I don't see, as it stands right now, TNX.X, the yields. And this is another pattern. This is the falling axe on the upside. Look right here. Look at that. And we've got this. And this looks like it wants to break to the upside. Well, and that's the 10-year yield. That's your car loans and all sorts of things like that. And that looks like it wants to go higher. And if it breaks out in a monthly chart for the same pattern. So that's the yields. That's my concern. And anything yield related, you can see, has been having a tough time. So I didn't do crude oil. Crude oil is right now up 44 cents, holding very nicely. One of the reasons why we went into an oil service type thing is I think that there's a chance this time that oil could break to the upside. And we're going to see very soon if it does, and it hasn't. This is called the Chapman Wave Inside Wedge Repellent Zone. Look how the price kept going to it. And then the wick shows you that it couldn't hold it. It pulled back that very bar. This is the first time it's nudged back into it with a big green candle. We're going to be watching that. So with that said, did I hear music? Did I hear music? No. Meantime, back at the ranch, look at this. Here's your crude oil. Crudy. Look at that. Beautiful bowl formation to the first level of resistance, which is right there on the continuous contract of 75.14. We're trading right now at 73.56. We've got a little bit of a way to go to get there. And then the real target will be 70. Oh, did I know? I don't usually like to write in the numbers because this is a continuous contract, meaning that the price changes every month because it gets smoothed out. But at this point, 77.36 is the high. So whatever the high is on the 8th of October, that's the level that it's trying to get to. Oh, I forgot. I had to redo this because I had to shut down prematurely without saving. I'm actually going to save. Somebody always remind me. Save. So we've got until maybe next week or so to try to get there. So save right now. I'm going to click save. Good. Okay. So let's just quickly look at this pattern right here. This is the whoops. I did click on it. Yeah. So this is the peak E in the 5-minute chart, only a C in the 10-minute chart, and I knew that there was going to be an issue right here. That's FG. There's no H. All right, well, sharp pullback so far from the beautiful up move, 34 points up in the E-mini. It actually went much more. It went to 59, was at 65-ish, and now it's trading at 59.50. Is that? See, yeah, 65. Okay, so I'll be. Am I premature? Yes, I am. VIX index. That's what we want to look at as we go to the break. The VIX index, VIX, not X. Yeah, look at that. We spoke about this the day that it made that high on the 18th of December. I said, Fed scare. I don't know. This looks to me like that volatility index is going to pull back sharply, and it did. But now it's kind of holding above it with the green 9-period moving average and the 200-period moving average. We're not out of the woods, I can tell you that. This is a struggle, but I don't see I see it selectively, very bearish, and you're looking at something. Let's see where Meta is trading right now. Meta is up 5 at 604. 604 with a peak C1, C2 at 638.40. Nothing to see here in the weekly chart. Still looks great. Let's go to Netflix. Yeah, that's pulling back. 941.75 was all-time high on the 11th of December. A couple of round numbers showed up before and afterwards, and here it is trading at 892. Okay, let's see what Tesla is, because try to rally. It's running a little bit, $5, $6, and $3.85. Tesla, I think, is done for now. Not done altogether, done for now. And I've got it as a monthly leg C. And it's January, you've got the whole month. Let me just put it this way. There's a inverted green Chapman Wave Roman candle. If Tesla any day in January can hold for 90 minutes above 445, then it's going to retest the all-time high of 488.54. But if it closes under the candle's low of last month, below 348, it's in much more trouble than just trouble. I'll be back. Oh, I won't be back. I keep trying to beat the bell. All right, let's go to this. I want you to look at XLU. XLU for the utilities, XLU peak C in the monthly chart, peak G in the weekly chart, and a huge pullback from 80 in the 83s to 76 in the, so this is peak A, B, C, D. Peak D in the daily chart stops dead at 83.41, and here it is at 76.75. I'll be right back. Basil Chapman sitting in for Tommy O'Brien. We've got my show coming up with Tiger Technicians Hour. It's Technical Friday, so I'm going to get into a lot of technical.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So, folks, Basil Chapman sitting in for Tommy O'Brien. I'll be doing my show, The Tiger Technicians Hour. Check out my opening call daily newsletter. And let me just say that when I'm looking at the deep cyclicals, like USX, this is United States Steel, giving back gains that it made, the cyclicals are... you need to see these cyclicals start very soon to the upside, because if they continue down, you cannot just have tech sectors and a couple of individual, stocks. And look, even the XLC, which has been an absolutely fantastic area of growth. This is the Communication Services Select. This is with Meta, Google, and Netflix, Disney, Verizon, Telephone. That's starting 102.67 back in early December, and here it is at 97. So you are starting to see some deterioration. My point was that on a shorter-term basis, we've raised cash because we're looking at this kind of negatively. with some sectors that we're trying to give an opportunity to. One sector that failed today, I'm really disappointed because it had an opportunity to show that there was some independence, and there isn't, and I don't like that. So this is becoming much more selective. I don't think there's any rush now, unless it's just stocks that are on a tear to the upside. That's different. But as a general overview, I'm just saying be cautious here, and especially when the yields keep going higher or remain high. That's just it makes investment more difficult. At least it makes certainly IPOs. We don't even talk about IPOs. There are hardly any. You remember there were periods where we had IPOs coming out every few months. There were every few weeks, in fact. And you haven't seen that for a long time. So this is a different period altogether. And there's a period of waiting to see what the next administration is going to do. So now I'm saying you've got to be a lot more careful and very selective. And even in the financials, I mean, look at JP Morgan. JP Morgan, it's running, but it's more struggling than leading like it did before. It's still doing very well. With that said, I'm going to hand you over to myself coming up on my show, the Dark Technicians Hour, straight after this. And then, of course, you've got Steve Rhodes, got great programming here at TFNN.